ladies and gentlemen, we've got a big update when it comes to the tariff revenue the U.S. government is taking in thanks to the Trump tariffs. The key thing is that we have not seen really any inflation increase. We've seen relative decrease relative to the projected numbers, and that is with the tariffs now fully in effect. We're waiting for a potential lag, but even with that, we've already got the China tariffs down to 30%. We've got the universal tariffs at 10%. And that's throughout most of May because remember, they renegotiated with China and now there's a 90-day period with them. That was in the middle of May. So we were technically taking in a lot more money from the tariffs because we had 145% tariff on China. It's down, but still, you're talking about $23 billion in terms of revenue. That's about $400 billion per year in U.S. revenue. Now that's going to drop because a lot of these companies are going to onshore their production because they don't want to pay the tariffs. They don't want to pay the amount. And then people say, well, it's going to drive up prices because they're going to be producing things at higher costs. And we just haven't seen that. And now the tariffs are tamed. So you're talking about, listen, whether it's 23 billion, you could argue per month, maybe it's 20 billion because we had the period in May to where Trump had them at 145%. So we were making way more and now it's down to 30%. So maybe even if it's 20 billion, I mean, right now I consider it a $1 trillion deficit. People say it's a $2 trillion deficit. Well, no, 1 trillion of it is servicing the debt. It's not necessarily a U.S. deficit in terms of revenue versus expenditures. We're talking about 1 trillion revenue versus expenditures. Servicing the debt, that could come down if we get lower interest rates. But you can't really count servicing the debt in terms of just regular U.S. expenditures. It doesn't make sense. We're talking about a $1 trillion debt. Trump is potentially raising 400 to 600 billion, but in this case, possibly $400 billion in tariff revenue. And then they say, well, it's going to drive up the prices. It hasn't done that at all. We've been able to keep an equilibrium to keep the inflation down relative to the amount of tariffs we have on these countries. And they're already tamed. But you have to understand something. People say, well, these negotiations, they're going to drive the tariff revenue down even more. We saw the UK deal. We're still raking in $6-7 billion per year from the tariffs we still have levied on to the United Kingdom. And that's with the new deal, but 10%, there's still a 10% tariff on certain sectors coming from the UK to the United States. And so we are making serious money and inflation is not going up and the consumer sentiment is a lot better. We just had a record May in terms of the stock market. Now you could say some of that is from a recovery that was done with the Liberation Day where people did not expect the tariffs to be nearly as aggressive, but still we had a recovery in mid to late April and we saw an even bigger recovery in May. So $23 billion, it's an average. You're looking at around 400 billion. It's probably a little bit less and it's likely going to be a lot less in 2 or 3 years. But if it's a lot less in 2 or 3 years with the same tariffs or even with these trade deals worked out, there's still going to be tariffs on these countries. That's the tariffs doing their job because that's more domestic production for us. And we can't have 100% domestic production. That's not what we want. We want some of these trade deficits, though, to be righted to a degree that put us in a better position. And on top of that, we're able to leverage our consumer base to make some serious revenue. And I would say you're cutting into 30-40% of the deficit. People say, well, no, it's only about 15% if we have a $2 trillion deficit. But again, if 1 trillion of the deficit, which is half, is going to servicing the debt we have, which is 37 trillion, how can we really count that as a government expenditure? That's just servicing debt. I agree it's there, but I'm talking about in terms of the administration spending money. It's really only $1 trillion in terms of a deficit. So you're talking about cutting in 40% of the deficit through tariffs alone. Now, listen, whether they get 400 billion per year, it's probably unlikely unless Trump keeps these tariffs on. Or you've heard what the administration has said. They say, well, this is the baseline in terms of the Chinese tariffs. I guess that's what it's insinuating, that when we do a deal with China, the tariffs are either going to stay the same at 30% or they're going to rise potentially. Now, I don't know if that's legitimate. There's negotiations happening. Trump is not happy with China, and he put out a statement about it yesterday. And so we'll see what happens there. But, you know, this is good revenue right here. You can see the best month of May in this century, May of 2025, an increase of 6.08. You did have a retracement in March. April was, even with the early Liberation Day, relatively recovered. and in May it's really recovered. So we're still looking for more recovery from the market, but right now, the way I see it, everyone talks about the rate cuts, and Trump met with Powell yesterday for the first time since 2019. And I'm guessing Trump said he really wanted the cuts to happen. We're looking at low unemployment. We're looking at a lot of good metrics when you look at the inflation. You've got the trueflation around 2%. That's their target. Now they look at the core, which is around 2.3, but even the core is looking amazing. And so when you've got all these numbers, we would expect a rate cut probably with the July meeting. Now, I believe it is July 30th, so it's really late July. The next meeting is the 17th of June or the 18th of June. So that's in about 2.5 weeks. Very unlikely they're going to cut. The problem is there's not enough runway in between the tariffs being levied and the effects of how inflationary they are, because they could still argue, well, there's a lag period in terms of the inflation and you're going to feel it. I mean, there have been instances like with Amazon and Walmart where they say, well, these prices are going to go up, and Trump says you need to eat it. And Amazon can probably do a better job at eating it than Walmart. Both of them have slim margins. They're able to undercut other prices because they just have so many items. But we'll see what happens. I don't think it's really going to drive up inflation simply because we have a 30% tariff on China and a 10% tariff on, that's just universal on all of our imports right now. So it's not going to be anything crazy. The auto tariffs are still in place. That's also helping. That's a 25% tariff. And it's a little bit more complicated when it comes to automobiles, especially with the parts, because a lot of the times the way the parts are sourced is you'll get them moving in between multiple different countries. So it's a problem. That's like what Rand Paul was talking about in terms of how Kentucky was being hit by the auto tariffs. But I know the auto tariffs have a lot of support in the Rust Belt, Democrat and Republican. And they said the administration did that was going to generate around $100 billion. So that's also going towards this. And we still have the steel tariffs on Canada. That's around a 25% rate as well. So there's still a number of tariffs out there that's helping us generate this money. And it's basically just another avenue for us to get free money while not raising prices. The prices are not raising to any crazy degree. If anything, you could argue since Trump entered, because the energy prices are lower, we do have a cooling period in terms of the inflation. Certainly the trueflation is down. That includes energy and food. The core does not, but even the core is down relative to when Trump came in. And the expectation is Trump beat the expectations twice. Yes, technically inflation in and of itself is up, but it's always going to be up unless we go through a deflationary period. It's relative to what it was under Biden. And this is even, we're comparing a year ago. That's when Biden supposedly had the inflation under control, and it's still down from then. And so remember when inflation started ticking lower, and you could say, well, the yield was a lot lower, and that's why they decided to cut in September. But the metrics right now are way better than when they cut in September. They cut in September because they wanted to spur the economy and help Harris win, and it didn't work. And I don't know how anyone else can argue anything different, because we've got way better metrics right now outside of maybe, oh, you've got to work out all these trade deals because we can't cut until they're done. We don't want to take that risk. Trump could reimpose serious tariffs, and if you've got the rate cuts happening with the tariffs imposed, that could be a bit of a problem. So that's really their only thing. But if we get a lot of these trade deals done, we get a trade deal done with China, we've got low inflation, we've got the 3.8, possibly 4% GDP growth, which was estimated yesterday for quarter two. This has to be cut. The July 30th meeting has got to be cut. You've got to cut it by 0.25 at least. And, the September, what is it? When is the meeting? The next meeting after that? September 8th, maybe. September they have to cut if they're not going to do it in July. I know what the betting says. The betting says it's probably not going to happen even in September. But September's like 50-50, so I think they probably should do it in September at the latest. They need to be cut in September, the latest. Trump wants them cut in June, I'm sure, because of the metrics. But they're going to say, well, there's not enough trade deals worked out. There's too much uncertainty. It could be inflationary if you don't work out these trade deals and you reimpose tariffs, because you've got a 90-day period. The 90-day period ends like July 9th, July 10th. That's why we negotiated with the EU, or it wasn't even a negotiation. They called up Trump and said, can you please change this? And we don't want to be tariffed at a 50% rate starting June 1st, which would be tomorrow. So Trump changed it because they weren't negotiating with Trump. The EU wasn't. They've got terrible TDS. They didn't want to even negotiate. So this is what you have to deal with these countries. Or I guess not, that's a union. Next, we've got CNBC. Personal income increased by 0.8% in April, almost tripled the expectations. Everything's up, and consumer sentiment is up. The markets are up. That's why and there's been reports on that poll that was done by Atlas Intel, which is normally such a good poller, and it's a poller a lot of the right normally touts because they've been so accurate with Trump. And their generic ballot, Dem +9, the Trump approval, none of it makes any sense. That poll was either tampered with or it was just not correct, because we're seeing a lot of numbers, and people say, well, it doesn't matter, these polls, but it is good for propaganda. We have a lot better of a sentiment now than we did a month ago, and what we're seeing is the initial liberal reaction to the energy and the crude oil going down was, oh, it's a recession. Well, now it's obviously not. So we have the golden goose to where the energy is down, the inflation is down, the tariffs are on, and they're generating potentially around $400 billion a year with very minimal increase to everyday Americans' prices. In fact, decrease in terms of gas with the energy prices being down. So they're freaking out. But they're trying to hide behind these fake polls as like, oh, but look at the data and understand, how do we interpret this? All of it, everything that we want, real wages are up. Everything is going well right now. And we have the Trump bill, the big, beautiful bill, which we could even start in arguing that and really picking through it and saying, well, we might not actually increase the deficit through these tax cuts because they're so historic, and the amount of consumer spending and access to capital people will have will increase, especially the middle class. It's amazing. And they try and manipulate that and say Trump is screwing the middle class. Well, no, this is an amazing tax cut that Trump has with this bill. And, Trump is very, very focused on, it's just such lies. Trump is generating $400 billion a year. That's 40% cut into the deficit. You could say 20% if you want to say we have a $2 trillion deficit, whatever. It's a serious cut. And then they say, well, he is raising the deficit. Really? A $400 billion cut into the deficit through tariff revenue, in which you guys said was going to increase everything, and now he's bullying these major corporations into keeping their prices the same, just like he did with Amazon when he called up Bezos. So they're all lying. And we know this, and this is a great thing what's going on with this economy. These numbers outside of the yield, and the yield is, these are foreign countries selling their treasuries, and Japan is not in a good spot, and they own most of our debt. Listen, the yield's going to be tamed, but the yield was higher. People say it's like a crisis. They were saying last week it's a crisis. The yield was higher a week before Trump entered, and that was with higher inflation under Biden's lame duck period, where the Democrats weren't doing anything, and just the lack of understanding the Democrats in terms of the economic situation is astounding. Trump enters. I mean, we had relative higher inflation. We had higher interest rates. That's when Trump entered. Trump's already shot. And you knew if Trump didn't implement these tariffs or do something radical, we were going to be in this jousting match for 2 years with Powell. We probably wouldn't even get a cut until after midterms. But Trump stomped inflation to death with the initial mass tariffs. All right, that's a little bit taking it a little bit too far, because inflation is still technically, the trueflation is 2%, the core is over 2%, but he brought the inflation down. No one else says this, I'm telling you. With the turmoil we had from the crazy Liberation Day and all the other tariffs where Trump said, I'm going to put it on. Remember, all of March was the tariff game. I'm putting on a tariff, now I'm taking it off. Now we're delaying it. Now we're going to put on tariffs on Mexico and Canada. No, we're taking off. So when you do all of that, it affects the market in a negative way. That's why the market went down. But we've seen the market recover with very minimal inflation increase. And so, wow, this is really tough for liberals to take it. You can't bet against Trump when it comes to the economy. And so Trump has a meeting with Powell, and he's telling him, you need to cut. I mean, this is, we work out these trade deals. It's going to happen. We'll see what happens with China. There's some problems there, but you know how it is. I mean, this is a very complicated situation. It's going to take months to solve in terms of that. That's why there's a 90-day period. These other trade deals have to start coming. They do. And the administration said last Sunday there was going to be a bunch of trade deals the next 2 weeks. We didn't get anything this week. We need to get trade deals. I agree. They got to start coming. That's going to help increase consumer confidence. That's going to help the Fed cut. The Fed's we get these trade deals done. Inflation is still down. We get a 3.5%, 4% GDP growth in Q2. And you're telling me, we're going to get that Q2 reading probably before that July 30th meeting. So that needs, so if you get a Q2 reading of plus 3.5, plus 4%. The Atlanta Fed said 3.8. I mean, that needs to be cut on July 30th. If we get that reading, if we get tamed inflation with a GDP increase of 4% and elevated consumer spending and consumer confidence and trade deals done, negotiated, they're going to come up and say, well, the one with China, the big one's not done. That's what they're probably going to do. That's insane if they don't cut then. So listen, I mean, any expert in economics will tell you, yeah, they need to cut at that point. I mean, it's the writing is on the wall. People say they need to cut right now. I mean, I try and give them the benefit of the doubt by saying, all right, we got to work out the trade deals because technically Trump could reimpose the mass tariffs. And if you've got high tariffs with lower interest rates, you're going to be dealing with pretty potentially heavy inflation. So I understand. To me, I understand. But when we get these trade deals worked out, we need to do it. But we've already received so much great numbers from the economy within the past 2 weeks. That's why that Atlas poll made no sense. Why would Atlas report worse numbers? They did a poll a month ago, and now Trump has gone down 2 points in terms of his approval relative to their previous poll. How is that possible? It's not. That is not a possible rating. Generic ballot Dem +9 is also impossible. So, and those polls can be used as propaganda. That's why it's like we're seeing these numbers. We know there's normies in the United States that like Trump. Trump probably has the top experts and political pollsters say, well, yeah, Trump's real approval rating is probably about 55, 60%. And that's even before solving the Russia-Ukraine situation, and maybe that won't be solved. Russia's going to have to play ball if we're going to get that solved. But, I mean, Trump he's given a valiant effort at trying to solve that. It's a very complicated situation. And so, look, we'll see what happens. But, guys, make sure you like the video down below. Also, follow me on X. Link to that's always in the description.